In today's video, we're going to look at what's behind all of this green in the crypto market. Ethereum came up over 19%. We must be aware that crypto cannot escape the stock market's gravity, and just check this out. Financials came down. We'll look into that as well. If you're seeking to be more of a financial and emotional blessing to yourself and those you love, you're in the right place. Don't forget to like the video and subscribe. Now, let's run the numbers. Just a quick note, for the members of the CTKS method service, I have just released a video just going through the updated price paths across all Tier 1, Tier 2 and Tier 3 charts. And there's a special bonus towards the end of that video that many people have liked already. Now let's get into the analysis. It takes many decades to understand Rule 446 actually exists. All markets and therefore all charts are intercorrelated and interconnected. One thing that we need to look at, what caused the crypto market to rally? When you're trading and investing with sizable sums inside the market, you don't want retail thinking. Retail thinking is simply like this. When the markets go up, for example, the stock market goes up or the crypto market goes up, that blue line is Bitcoin's price. If it goes up, hey, buy, buy, buy. But what do we see often occurring? When things go up, things tend to go down as well. Price is always moving in a wave. What happened with Bitcoin in the last 24 hours? We saw the major market indices rallying, and rallying really quite well. What does that mean for the crypto market? If the major market indices start to rally, Bitcoin won't be far behind it. Sometimes we get into lag positions, is exactly what happened in the past trading session. But there's a little bit more to Bitcoin's rally than just the main markets. But please keep in mind, the main market futures are declining, and there is a reason for this, and I'll go through it. You must be aware of this as well. We know that the major market indices came up and then decayed. As they were coming up, Bitcoin was a little bit undecided as to what it was going to do. But then it came out, the odds of the Ethereum ETF getting approved, and that's only a couple of days away until the SEC makes their decision, jumped from just about nothing, 25%, up to 75%, where it's remaining capped at this current time. But that was enough to create widespread euphoria inside the crypto market and see prices just skyrocketing. Welcome to crypto. It's going to be a really fun week, and the meeting minutes from the last FOMC meeting are coming out later in this week's. The next FOMC meeting is in about 23 days. Something happened inside the market which had the banks on edge. We can see just 24 hours ago the potential probability of a rate easing just here was 8.9%. It's now dropped to 0.8%. If you're doing your cheat sheet, you know that that's really problematic. The reason that the banks went red is because the rates are staying higher for longer. It would be easy to think when the rates are staying higher for longer, the banks make more money, but they also have a lot more defaults. And if the interest rates are too much for individual investors or commercial real estate or different businesses to cope with, we get a lot of negative follow through, as was the case with New York Community Bancorp, who went, unfortunately, bust. They were taken over. And we can see the S&P Regional Banking ETF is starting to weaken. Bit of weakness here, bit of weakness here with JP Morgan Chase. That's what explained the redness in the main market, and that red you need to pay attention to. But Ken, I'm only trading crypto. I don't need to know about the stock market. I don't need to know about the fear gauge. Oil, who cares? Yields, oh, they're just for old people. Bonds and things, I don't even understand them. What about gold? Oh, that's just for Peter Schiff. What about the US dollar currency index? Well, I don't do Forex, I just do crypto. Please don't think that way. When you look at a chart, all these charts are intercorrelated and interconnected. For example, if the Nasdaq major market indice moves up, you can be pretty much assured that Bitcoin is going with it. I created something really special, the CTKS timing cheat sheet. It's available from ctksmethod.org and it's very expansive. It's free. People who fill out the cheat sheet have already seen the signs in the market. For example, when the DXY is decaying, that is generally an indication that risk-on asset classes such as Bitcoin, and Bitcoin you could say is the canary in the coal mine. It's a really good thing to look at. Now you might look at this and say, well Ken, there's just no real relationship between Bitcoin and the DXY, the US dollar currency index. Let me invert Bitcoin and let's see if that's the case. That probably gives you a much better idea. As the DXY goes down, expect Bitcoin to go up. This is an inverse relationship, and it's a directional correlation too. A lot of people measure correlation statistically. Directional correlation is something completely different. Now we can see that we're getting a little bit of a divergence. Not too much, because Bitcoin is starting to flatten out. It's starting to be hit by the uptake in the DXY. Maybe I'll just re-invert that so that looks a little bit more intelligible. So as the DXY starts to come up, we expect negative price momentum to go throughout the crypto market. And knowing that the rate probability for a rate ease is going down, and it's going down really substantially. If you're doing the cheat sheet every day, you already know that that's a really substantial decay in the probability of an ease. When an ease occurs, or when the probability of an ease decreases, that puts upward momentum on yields in the DXY, and that is bad for markets. There's a raft of economic data coming out this particular week, but the FOMC meeting minutes usually moves the markets around, so please be aware of that. That's coming out on the day that the SEC may potentially either approve or deny the spot ETF for Ethereum. When it comes to financial markets, it's really important to have two divergent opinions at the same time. That of an investor, which is a long-term hodler, and that of a trader, which needs to time the ins and outs of market behavior. If you can ride these up waves, you can do incredibly well. And I just want you to keep two levels in mind. That's 73,134 as well as the 62,222 mark. Price could be well bounded between these areas for the upcoming week. If the spot ETF is not approved for Ethereum, expect a movement down towards longer-term structural support. We are in a bull market. I don't believe that the bull market has finished, that we've had our blow off top. I don't believe that at all. I believe that Bitcoin and, of course, the alts, because if Bitcoin is coming up, everything is shining. How can I prove that to you? Oh, I got an idea. There's a rule that we know that no alt can escape Bitcoin's gravity. If Bitcoin is doing this, what are the alts doing, such as Ethereum? They're doing the same thing. What about Binance Coin? Doing the same thing. What about Solana? Doing the same thing. XRP, pretty much doing the same thing. But XRP is just a little bit weak at the moment. But that can change around really quickly. XRP and ADA like to lead out of dark periods in the crypto market, so just bear this in mind as well. What about Doge? Yeah, it's following the gravity. What about SHIB? Following Bitcoin's gravity. What is Bitcoin's gravity? It's that blue line. And a lot of people think that it must follow it absolutely spot on like this. Why? Why does it have to follow it spot on? It's just the directional correlation that you're looking for. If Bitcoin is bolting up, I'll just zoom in here because it just did. For example, if Bitcoin is absolutely going for it, puts in one of these big candles, you can be pretty much assured that the rest of the crypto market is going to catch up with it. Look at that blue line and look at the alts. It is a very, very interesting situation. And when you see an alt lagging Bitcoin's gravitational move, it's generally in to get whipsawed up to it or down to it, depending on which way it's going. And that's a pretty good one to think about as well. So if Bitcoin goes down like this, and you can see that blue line was coming down, what's happening to Doge? It's coming down. What about Solana? Yep, sirree, it's coming down. What about Ethereum? Yes. Binance Coin, yes. XRP, yes. Cardano, ADA, absolutely. SHIB, this is the way of the crypto market. You must know what Bitcoin is doing. But can I only do a meme coin like Doge? Oh, yeah, okay, Doge. Yeah, that does follow Bitcoin's gravity, doesn't it? I didn't know that before. That's how you need to look at the market. Look at Bitcoin first, because if you know the direction of Bitcoin, you've got a pretty good probability that your alts will go in the same direction. If Bitcoin is tanking and your particular alt has managed to diverge, just be careful, it will be pulled back to Bitcoin's gravity. But if you're looking at something like this, as in XRP's case, we would expect if we get follow through of this positive momentum, and we could do for a couple of days, because the crypto market is incredibly positive and enthusiastic. And they typically don't know too much about cross correlations and how no chart walks alone. But that's why we're different, because we want to be more of a financial blessing to ourselves and those we love. In order to do that, we must have knowledge. Inside the crypto market, Ethereum has been pushed down quite considerably thanks to our friends at the SEC, and they wanted to classify ETH as a security. Right now, what are we seeing? A big surge up because optimism is high that Ethereum spot ETF will get approved, and that's why ETH has jumped up so dramatically. It's up over 18% at the current time. But when we look at Bitcoin, it's up just a little under 7. It's outperforming BNB, which is up a little bit over 4.4% or 4.35%. What about Solana? It's doing really well. Solana is so incredibly strong. XRP has that gap between its behavior and Bitcoin's behavior. Doge is doing well. A lot of people are just piling into the memes. After all, they're fantastic projects. They create real-world value. The thing that really happens with memes are just generally priced so low, people get millions, if not billions, of a particular token, and they say, this thing is going to make me a trillionaire. And then they look at something like Bitcoin, and they say, oh, I can never afford to pay, I can't even get 1 Bitcoin. So I'm going to get 1 billion of something like a meme instead. With the right timing, that could be a really good idea, because if Bitcoin is coming up, you can be pretty much assured that those memes are coming up as well. And when we look a little bit deeper into the top 16, we can see that Bitcoin's gravity is very important to understand. If you don't understand Bitcoin's gravity, you won't be able to just understand when you can get in and when you can get out of a variety of different projects. And if you're holding memes for the long term, well, that could be a strategy, but don't bet the house on it. One of the things that we need to look at, we need to be professionals. We need to look inside the market and try to pick up timing signals. Timing is always being ahead of the curve, ahead of the pack. We want to understand, is the economic system strengthening or is it weakening? Are we getting follow through on the major key sectors that we need to get follow through? If there's been a retracement, will that likely continue, or is it going to find a level of support and come back up again? We need to pay attention to the markets. And a lot of people would say, oh, that's just too much work. I just want to find a random meme coin and just put all my money in, and therefore watch it make me a multi-millionaire by next week. This is a fantasy. If you do stuff like that, you're going to get hammered time and time again. We all know who have been inside the markets. When you look back to, I think, realistically back nearly 40 years ago when I entered financial markets, I thought exactly the same thing. I'm going to get a penny stock. Hey, crypto didn't exist back then. I'm going to get a sub 1 cent stock, which is sub 1 cent for a reason. The reason is it's generally rubbish, and it will create a gaping black hole to take all your money. I'm not saying crypto memes will do that. Doge has really done really well, and it's created real-world use cases. And the memes, in order to survive, they must do that. They must move past just a level of gambling and speculation into something more sustainable. If you're going to hold the value of that particular thing that you're investing or trading in. Investors typically do something like this. I'm going to buy when it goes really, really green because I feel really confident that I'm getting in at the right time. And then they just panic when it goes down. The better way is, if you are a true investor, when it goes down, you want to buy there and just hold it. When it comes down, you want to buy it around these declines and hold it there. Keep on stacking. And when we look liquidity-wise, when liquidity is coming into the market, that's supportive of the sugar rush that hits stocks, crypto, and just about every other asset class. But when the sugar rush tends to decrease and tends to break below a specific level of increase, well, that's not such a good thing. That could mean that the markets will start to have negative price momentum, but that's fantastic if you're an investor because you want that. If you're a professional investor, you want to buy when the stock, the crypto, the commodity, whatever it is that you're investing in is coming down. Why is that? Because if it comes down 50% and it goes back up and achieves that level, down 50% is not up 50%, it's up 100%. This is why institutional players always love red price action. You also have to be aware that even though price moves in a wave, sometimes it can consolidate, sometimes it can go neutral, and that can be a very profitable opportunity. You need to keep the neutral case in mind. Most people just see the up case. Hey, the thing has gone green. I'm going all in and more, especially under leverage, because I know it's going up to the moon forever and it will never decrease. And if it decreases, it's going to zero. It'll come straight down like that. This way of looking at the market is very naive. The market just doesn't go up the wall and doesn't come down to zero. It's not going to 1 billion if it's zero right now, and it's not going from whatever it is to zero if it has a price retracement. What happens is just generally the price moves in a normalized manner between structural levels. This is how price moves. Even in an uptrend, it's coming down. And in a downtrend, it's going to be coming up as well. You can make money so long as you get your timing correct. And that's why the synchronization factor is so incredibly important to you. You must synchronize in with the market. One of the best ways to do that is to do the cheat sheet. And you know it's a free thing that you can do, and you can look across all of the markets and gain a level of expertise that is institutional grade. Your mindset is an incredibly important asset or a huge, huge liability. Inside Zone 1 and Zone 2, which are the low knowledge zones, people either panic and go nuts and can't sleep at night, or they go absolutely nuclear and they blame everything and everyone around them when price just moves in its natural price wave. Inside Zone 1 and Zone 2, people are only interested in price going up because, hey, it's going to infinity. And there are so many channels out there, so many YouTube influencers that always say price can only go up. It's never going to revisit this level. Well, anything is possible inside financial markets, especially if we get a black swan. And they tend to come along every X number of years. They can't be avoided. But if you're doing your timing, you don't have blinkers on. You're looking at the market through the lens of institutional eyes, and that's what you want to be, an institution of one. You will soon realize that if you're just coming in on the green and going out on the red and suffering all this emotional trauma, which is part and parcel of being inside financial markets, you're just losing money. You may have diamond hands, but you have sleepless nights. You don't want that. You want to go instead through education and learning, patience and rules, into Zone 3 and Zone 4, where you can make money consistently, and more importantly, you want to keep it. To do this, you need to rewire your mind. See red as your friend and green as a cause to just pause and say, what's cooking here? The green may look fantastic, and it certainly looks fantastic when we're looking at our accounts, but just remember you want to buy on red, which was yesterday, and sell on green. But it depends when you sell. You don't have to sell immediately as it turns green. You can have a longer term strategy to sell when things go through their exponential blow off top, and that's about Well, potentially about a year away. Right now is the time to stack if you're an investor, and it's the time to get your timing correct if you're a trader. And combining both investing and trading skills is absolutely the way to go. I have a trading account and I have an investing account. The two are not the same. They're clearly separated. This particular video is more about mindset because it's really important, especially on the green days. Being dedicated and committed means that you will put the work in. If you put the work in, you'll get the results out. Just think about anything that you've done in your life. If you're dedicated and committed and put the work in, you've obviously advanced far more than if you just slept the days away. And understand, you either win or learn, and you should never blame, because when you blame, you lose the lesson, and the cost of learning the lesson goes up exponentially each time you use blame. The smartest people in the world, they don't use blame, they use understanding, because understanding will cut the cost of your learning way down. So therefore, we either win or learn. But Ken, I just want absolute certainty. Where's Ethereum going to next? Where's silver going to next? Where's gold going to next? Where's Bitcoin going to next? It's just moving between structural levels in a wave-based function. That's it. That's as simple and as complex as it gets. In the comments today, I'd like to talk a little bit about mindset. What mindset have you found to be the most productive for you? And when you look at mindset, I think a lot of people start their trading and investing journey with little to no understanding of the mindset required to be successful inside financial markets. If you could offer any wisdom to help people who are just getting into trading and investing, what would you recommend to them? Or if you could just go back and tell the youth that was just starting with trading and investing, what you've learned right now, what would that be? That's a really good thing, and I want to cover off an entire episode on that because I think it's so really valuable. And many thanks to Port Power 888. What a cool number. Thanks K&K. I either win or learn and never blame. It's been a struggle at times due to the mindset most of us are brought up with, but once you can recognize and change our outlook, suddenly everything opens up to look positively at any situation we face. I know I'm repeatedly reminding myself of this. Thank you, Port Power. That's really cool. Blame is the most destructive of emotions in the entire universe. It fuels anger, it fuels everything, it fuels depression, it fuels anxiety. Blame is a horrendous thing. We need to eradicate it. And of course, if you're inside financial markets, blame will mean that you just consistently beat yourself up over every missed opportunity. Please don't do that. There are always new opportunities on the way. Please let me know in the comments, what advice would you give your younger self, your unknowledgeable self, when it comes to trading and investing in terms of managing your emotional state? Everything is emotion inside financial markets. And if we can extract gratitude from each and every day, no matter what's happening inside the markets, you're already on your way to inner wealth. And that's a really important thing to get. Have a great day or night ahead, my friends, and Kate and I look forward to catching up with you again in the next video. Bye for now.